If a buyer commits to a 30-year mortgage now, how low would the locked interest rate have to come down before it would be economically feasible to refinance? It just really depends on rates and fees a little bit. Rates and fees. If you pay a loan fee, let's just use $1 million loan again, because I guess there's no $300,000 loans that we're working with anymore. You use $1 million loan. If you have a 1% loan fee, then that's $10,000 plus your miscellaneous closing costs for escrow, title. Those appraisers, they want like $2,000. So your closing costs are going to be like $8,000. And then if you have a loan fee on top of it, then you're at $18,000. So if there was a loan that didn't have a loan fee, so we don't have a loan fee and it's $1 million loan, and you could lower your interest rate by 0.5%, how much are you going to save in a year? 0.5% on $1 million is how much? $5,000. And we said closing costs are about $8,000. So in a year and a half, you've broken even. If you're putting in a loan fee, you just need to figure that out. Just a general rule of thumb. If there are no loan fees associated with it, then 0.5% in interest is good enough to refinance. If you're starting to pay loan fees and stuff, it should drop 1%. So if they have a 6% interest rate with fees and everything else, with loan fees and everything, you could be at 5%. It also, you have to ask your client, well, how long are you going to have this loan? Well, I'm going to have it 3 years. Well, that's your break-even point. It doesn't matter. So basically, you have to take the amount it's costing and how much you're saving in payments and divide it out. And if the break-even point's like 3 years or less, then you're good. Simplest rule of thumb, though, is 0.5% lower, no loan fees, closing costs, it's worth it. 1% lower if you're doing closing costs, like paying loan fees.
Buy or sell Maui Real Estate, Romvari Realty.